time for a look at a developing story with Kevin Green, senior markets correspondent here for the network. So Kevin, we are talking all things AMC, unfortunately on a pretty negative day, taking out new 52-week lows in today's session. So walk us through what's moving the stock lower today.
Definitely. So AMC actually did announce that they are going to sell around 40 million new shares in the marketplace here. That is why we are seeing the shares down around 29% in the session at this point in time. Now, they're doing this in an effort to try to raise capital in order to obviously handle and manage their debt and keep up their operations here. Now, we have seen this move happen amidst the reverse split that we saw around a week or 2 weeks ago here, where they had the 10-for-1 split, and they also retired those APE shares here. So they're really doing a lot of restructuring in order to try to raise capital and be a little bit more efficient. Now, the one thing to just kind of keep in mind, we have seen a little bit of an uptick when we do see traffic going into theaters, and especially after the Barbie movie and the Oppenheimer movie. And we are also getting details that Taylor Swift is actually going to have a little bit of a movie as well for the Eras tour, and that could also bring in additional traffic, so much so that AMC and as well as Cinemark are going to be having their own type of cups, collectible cups and popcorn buckets to offer out to those that do attend the show, which could be a revenue driver here. But one thing to just also kind of keep in mind, the shares, when you're looking at this chart, it does not look appeasing from a short-term and long-term basis. We are seeing the stock continuing to move to the downside, but we also want to address the issues when it comes to short selling the stock. And we have a chart up right now. This is the failure to deliver. So if we have somebody that's shorting the stock and they're unable to really receive delivery or pay for those shares, then we have this failure to deliver occur. And we can see these spikes over the last year and a half. And recently during June and early July and even early August, we did see this start to spike up, which does indicate that short sellers were coming into the marketplace. Now, right now, the short interest is sitting at 29.2%. The off-exchange short volume ratio is sitting at 43.4%. But what we have seen over the last couple of weeks here is actually a decline in those failure to delivers. We have been seeing around 11.5 million shares on a daily basis if you're looking at July, but in the start of August that actually went down to around 4.5 million shares. Now that could be the sense that short sellers are buying back some of their shares. That could be some other reasons for that as well, but I think it is worth acknowledging the fact that this is coming under heavy short selling pressure, and all it needs is really one or good pieces of news to come out and really shock the market like we have seen in the past, which is why it was called a meme stock a couple of years ago. I'm not going to use that term right now, but I think it's very interesting to not only see the technicals in the chart, but also the fundamentals on why the stock has been depressed over the last couple of months.
Yeah, and Kevin, I'm really glad you brought that up, because that FTD is something, the concept is something that is so frequently discussed when looking at AMC shares. The apes are always discussing it. I think it's a very, very important aspect of why we've seen so much selling as of late. But also, I mean, to simplify this and to not get too much in the weeds, because you can get very deep in the weeds on all things Reddit and all things social media regarding this stock. But to keep things simple, is like at this point we're seeing this company has restructured some of their debt. They also had that reverse stock split just a few weeks ago, and now we're seeing the fact that they have this share offering agreement. I mean, to me, this is a company that's basically raising every single flag out there that says we need more money because we're just running out of cash. I mean, is that just simply put a way to frame this? Because at the end of the day, that is not to me a sign that a company is fundamentally super strong.
Yeah, I mean, sometimes companies do raise capital even if they have a strong balance sheet. I think in this particular situation, obviously they are in need of some cash, but the way that they're going about it on the equity side is a little bit better if you're looking at the overall debt structure or term structure for shareholders and debt holders for the company here. If they did issue additional debt, that also could come at a higher rate of interest. We know we are in a high rate interest rate environment at this point in time. And when you are issuing shares, you also know that those shareholders in themselves are taking that risk. They're putting the principal up in order to see future gains. And so that does allow the company a little bit more flexibility when it comes to how they can allocate that capital in its normal operations. I think that's something to be said there. But yes, obviously you don't want to see a lot of things going on as far as financial maneuvers in order to try to raise capital. But this is not going to be an overnight story where they go from rags to riches, if you will. This is going to take a lot of time. And we have seen companies coming out of of pretty deep debt and having issues when it comes to their business model and really transform themselves. So I think this is going to be a longer term story. I think it's going to be very interesting to see how this pans out over the next couple of years, if you will. I'm not sure if we're going to see a turnaround overnight, given the headwinds when it comes to the style of their business, as well as some of the fundamental or technical factors that we talked about earlier.
And if you've been following any of the Taylor Swift economics over the last year, you know that this era's movie will, I'm sure, be an absolute success. I was reading actually some that thought it could be a type of Marvel movie basically release or equivalent to like an Iron Man. That's how popular it's expected to be. So that's expected to obviously have a huge benefit for names like AMC and Cinemark, like you said. I can't wait to see all of the hype that surrounds that event, but we will leave it there. Appreciate the breakdown as always. Kevin Green, Senior Markets Correspondent here for the network.